Mic check, 1 2. Hey guys, so this is a quick video of about the trades I took today on gold USD. On the currently we're on the 2 hour chart, and so I just want to explain something that is it's very simple to understand, and it's probably, in my opinion, the best way to swing trade. Matter of fact, it's called market structure and price action, right? And you don't need any indicators. You don't need any sort of RSIs or moving averages. You don't need anything. All you need is to be able to see the charts and see where reactions are placed. In my opinion, from my trading journey, what I've learned is that market structure and price action is based off of reactions of the chart, right? Reactions in the market, right? And I'll explain exactly what I mean by that. So, for example, over here where I've marked out this circle, this is reaction, because look, price has come down and it's brought off of this part, yeah? Then obviously prices come here, so, and then it's sold off at this part, yeah? Obviously if we could only see this part of the screen, if you could only see this part of the screen, then you can't call it a reaction just yet. You actually need more trading data or more time data or more, what you meant to see more to actually see it as a reaction. So in my opinion, if we actually wanted to, so the trades that I did catch, we had to see all of this. This is everything we had to see. Only this part that I've just marked up. That's all we had to see. All the reactions to this part, because we could have drawn out these key levels without seeing these reactions. For example, let me explain. This reaction here, price came up, consolidated, sold off. Price came up, hit it twice, tried to break through, sold off, right? Price came to here, reacted, brought up. Price came back to here, reacted, consolidated, brought up, right? So this is a reaction. Along with this is a reaction. Price came down, brought up. And this is a reaction. Why is this a reaction? It hasn't done this, hasn't brought up, has it? It's a reaction because look, what is price doing right now? It's imbalanced. Sorry, no, right now price is balanced, right? Essentially it's balanced, but that's, you don't really need to get into that. That's more like order flow. So right now, price isn't doing much. It's consolidating because the buying and selling pressure over here is so much, right? The reason why buying and selling pressure is so much over here, because look, every other time price came here, it's brought off because because buyers didn't want price to come down here, right? But look, sellers already were able to get down here once, so who's to say they weren't able to get down here again? It's just made the reaction, right? It's made the reaction. This is the reaction. So cool. Let me just delete this. Actually, no, I'll keep that there. So this is a reaction, 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 right? Oh, that is also a reaction down here. One sec. This is also reaction down here, right? Seeing all of these reactions, we can mark out our key levels, yeah? This is our first key level. This is our second key level. And this is our third key level, right? This may not be that strong of a key level, no, but it is some sort of key level, right? So now we go on to our current range where we're currently looking at the chart. And so we're watching the chart, whatever, price has reacted off of this once, confirming this key level, and it's pushed through and come up to here, right? Inactive while you're looking at it, right? And then it's made another reaction, confirming this key level again by selling off, right? Then it's come back to here. It's made another reaction by price buying in at a random point, trying to go back up to here, and then selling off again. This is showing us, it's all showing us that there's reactions to these key levels, right? Obviously, there's not always reactions to these key levels. They're just there to give you a sense of idea, right? Of where the key buying and selling is happening, where the key powers are on the chart, right? So cool. Now we have all of our key levels pointed out. Let's say, again, we could only see this part of the chart, right? I would ask you, what would happen when price gets up here, right, to this key level? Well, you should automatically say it's going to sell off. Why should you automatically say that? Because what did it do every single other time? Price sold off, right? Over here, what did it do? Price sold off, right? Over here, although it may not have gone right to the top, it still touched it, it still wicked it. You can still see that wick there. And what did it do? Price sold off. So when I ask you, what is price going to do when it gets to this level? You should automatically know it's going to sell off, right? Perfect. So now let's look at our middle key level. So our middle key level, it's not in my head, it's not a level that you can buy and sell from. It is a level that if sorry, you can buy and sell from, but you can't buy and sell from just a reaction. You have to buy and sell from seeing it getting broken, right? So for example, this got broken here up on a 2 hour. You could enter a buy up there, although it is small, you're still going to make a profit. But you don't know where you're targeting, because obviously you could be targeting up here. Yes, every other time price has gone above here, it comes up here, but look, it didn't go all the way up there, so most likely you'd break even on this trade here. Then if price comes back down, closes under here, you know for a fact you can sell off down to here, right? Why can you sell off down to here? Because previously, what has price done when it's closed down here? It's sold off down to here, right? Previously, what did it do? It closed down here, it sold off down to here. Now it's sold off down to there. That brings us to our next key level over here. What happens every time price closes below this key level? What does it do? It sells off to the next key level, right? Sorry, not this key level. It sells off to this key level over here. And this key level was drawn out in the current market time, right? The current time. So whilst we were in intraday, right? So we could have only figured out this key level because of, not because of this just one sole reaction, because of this reaction as well. So essentially this key level would have helped us with this trade over here, with this one coming down over here, right? That's where that key level would have helped us. Otherwise, when entering this trade here, we would have just taken our profits there and called it a day, right? If we wanted to be risky, we could have put our stop loss at break even and tried to come down to the same level as this one, or tried to come down to here, but that's just adding extra risk for no reason. When you're already in profit, just stay in profit and be happy that you're in profit, right? And exit your trade. So let me just draw this back out now. Okay, boom. So simple as that. Now this key level, why is this a key level, Seb? You may be asking, right? I'll tell you why it's a key level. Because when we zoom out, what happened over here? Boom, price reacted. It reacted straight, did it not? Look, it's had a reaction here, right? And this is when? This is the 26th of March 2026. And what is this? This is the lowest of our session. This is the lowest of the month, right? This is indeed the lowest of the month. So it has to be a key level. You know you can buy down here. You could have taken this very, very amazing trade and made a very, very nice profit from this. Obviously, I didn't take this trade. No, I didn't, because I wasn't on the markets at this time. I don't know what I was doing, but I wasn't on the markets at this time, right? Could have taken this trade all the way up to there. You could have taken this trade up to here. You could have up to here, this key level, because remember this key level wouldn't be a thing yet. You could have taken it up to here, or you could have taken it up to here, or you could have taken it all the way up to there. Either way, you would have made profit with such a small drawdown. You would have made it with such a small stop loss, right? So now what happened here? Price touched this key level, right? And it ended up reacting and selling and closing down here. And what are we going to do? We're going to sell off, right? It's as simple as that, guys. Trading gets simple when you start to understand it more and look at it more. And you may be like, oh, but like, how can we see these reactions and how can we label out these key levels? I don't know what to look for in the chart. I'll show you right now what you need to look for, because that is like the dumbest thing I can hear. Look, oh no, the chart is blank. What do I do? How do I see it? Look, if I place my cursor there, how many times is that line touched? That is your key level. If I place my cursor here, how many times is that line touched my cursor? That is your key level. If I place it here, how many times is it touched? That is your key level. And it's not like, oh, this is a key level because price goes through it so many times. No, it's not, because price is going through it so many times. Price isn't touching and reacting. If price is going through your key level, that's not a key level, because it's touching and reacting. For example, this here is a key level. Look, let me put my drawings back on. Look how we can extend this key level. We can extend it all the way out to here. Wow, what, like it, guys, it's this simple. The key level has been around for how long? This is April, 28th of April. This is how long this key level has been around. Same with this key level up here. Do you see what I mean? Even this key level has had reactions. Reaction there, reaction there, reaction there, reaction. Even that key level has had reactions. We're on the 2 hour time frame, guys. We are just looking from, look, May the 26th, which is a couple weeks ago, yeah, till now, yeah. That's all we need to see. It's this simple, guys. It's this simple. Trading cannot get any more simpler. Look, my charts can look like this sometimes, as we all know. My charts can look crazy. They can look too in depth, right? They can look so in depth, right? But they don't always need to. You can make an assumption. You can take a trade off of key levels. For example, BTC USD. This trade here that we took, I'll show you the trade we took. How did I take this trade? Who's calling me? How did I take this trade? Key levels. Key levels, guys. And yes, a little bit of volume profile, but mainly what? Key fucking levels. Now take this knowledge and use it. Goodbye.